Hi friends, hope you are doing well. In today's video, we'll discuss one important topic regarding transfer of funds by non-resident from NRO account to NRE account and to further repatriate them to their foreign bank accounts. Now, as you might be aware, that under FEMA, that is Foreign Exchange Management Act 1999, non-resident Indians can keep two types of bank accounts here in India. One is NRO and second is NRE. NRO is ordinary saving accounts or FD accounts, and NRE is for the repatriation of funds from or to India as and when required. Income from NRO, that is interest income from NRO account, is fully taxable, and interest from NRE is exempt under income tax law. So in today's video, we'll discuss some checkpoints, some checklist that one is to keep in mind before making such fund transfers. Otherwise, you will surely land up yourself in land of litigation, because income tax department has now become extremely stringent for such kind of transactions. So let's get started. As I said, income tax department is in no mood to spare these kind of transactions, especially funds are getting transferred from India to abroad. So I prepared this basic checklist that non-resident can keep in mind before making such transfer. Let's see each and every point in detail. First is taxability of fund transfer. So when we talk about taxability of funds, the question arises, is transfer of funds from NRO to NRE taxable? One word answer is no. Such kind of transfer of funds is not at all taxable under income tax law. Then question also arises, why so much fuss is created by department for such kind of transaction when person is transferring his own money from one bank account to another bank account? That doesn't generally happen to residents SSE. Then why so much fuss is created when such fund transfer is done by the non-resident? Because in case of non-resident, when fund is transferred from NRA to NRE account, income tax department actually become helpless, because under income tax provisions they don't have much authority to verify the sources of funds lying in NRE account, because it is basically non-resident external account. So that's why department want to make sure that NR has paid a fair amount of taxes before making such fund transfer. That's why they want to verify these transactions at the time of transfer only. So the most important thing that a non-resident has to keep in mind while making such transfer is to have explainable sources. If you are non-resident and you don't have any regular source of income here in India, then department wants to know from which sources you have deposited such large amount of money into your NRO account. So you may have sold any investment or property, or you may have inherited any property, but you must be able to explain the sources to department if need arises. Otherwise, department is going to make addition as unexplained investment or unexplained credit. And as you know that any addition made in this section is liable to tax at the rate 60%, and plus with interest and penalty it goes as higher as 83 or to 85%. So you must have that explainable sources in your hands whenever you are making any transfer, and that you are also required to mention in your form 15 CSEB. So it got clear at the time only that you have explainable reasonable sources and you are paying tax, your fair share of taxes here in India before making repatriation of funds. These are some of the points that non-resident can keep in mind for making any hassle-free transfer of funds from India to abroad, and to of course avoid any future litigation. Thanks for watching this video. Have a good day.